Welcome to this lesson where we are going to discuss profit and loss accounts. So this is the continuation of final accounts. We discussed the trading account, and we're going to continue from the trading account. We're going to start profit and loss account. It should be noted that these two in exams, they are put together as trading and profit and loss account. So you have to prepare the trading account, then after it, you have to prepare the profit and loss account. So I've discussed the trading account where the objective was to find the gross profit. Now, we want to see what to do with that gross profit for us to know the actual profit or the net profit the business has made in a given trading period. So when you do the trading account, you get the gross profit. So from that gross profit, you have to add all the incomes you have received. Okay, all the incomes, you have to add them to the gross profit. Then after that, you have to subtract all the expenses. Okay, then what you're going to get is the net profit or loss. So this is what trading and profit and loss account is all about. So this is the layout of the profit and loss account. Of course, just like any other accounting table, on top, don't forget to put the title. Okay, I'm not showing the title because I just want to maximize visibility so that you can see everything, considering the fact that most of you are watching this video on your phones. Okay, so but on top it should say profit and loss account as at the date at which you were recording this, which most of the times is the end of a trading period. Okay, so here you have got particulars or details, and the rest it is just amounts. Okay, there are different layouts, so the principles are the same, but the layouts may differ. Okay, so we have you start remember what I said in the introduction. This is prepared together with the trading account. Okay, so together they are called trading and profit and loss account. Okay, so the first step is you do the trading account. If you have not watched the video on trading account, check out the video on trading account. So after trading account, there is at the end of the trading account, you get the gross profit. So that gross profit, you bring it here. So gross profit brought down, you write the figure of the gross profit. Then after that, you have to add all the incomes the business made during that trading period. In this case, we have just two incomes. So the first one called discount received, which is just the discount you received in the business. Okay, so it's an income. You did not expect to have that. You have received a discount, meaning that you have made extra money that was not accounted for, or that it was not expected. Okay, so that income, you write it here. You go to the next income, commission received. You have received a commission, just like mobile money commission. Okay, so you write that commission here. Okay, so once you write all the incomes, then you add them, the total, you write it here. Okay, now when you write the total here, all you have to do is to add to gross profit. So you do this number plus this number, you get this, which is called the total profit. Now from the total profit, you have to remove the expenses. All the expenses must be removed from this total profit. What you're going to remain with is the net profit, and that's the purpose of the trading and profit of the profit and the loss account, to find the net profit. Okay, so you are going to write less expenses. So all the expenses are going to be written here. So the first expense in this case is rent. Okay, so you write the value here. Depreciation. Depreciation is something that we're going to discuss later. It's when an item is losing value in terms of usage. Think of this: you have bought a car to be delivered in your dondos. You want these dondos. For those who don't know what dondos are, I'll just say, okay, or bread whatsoever. It's not bread, but in case you don't know what a dondo is, okay. So you are selling dondos. So we want these dondos to be delivered using using a vehicle. So you have bought a vehicle. Okay, so this vehicle, you have bought it at 90,000 kwacha. It's a Vitz. Okay, for those who don't know what a Vitz is, you will with time. Yeah, so it's a Vitz. It's 90,000 kwacha. So this 90,000 kwacha, as you are using the Vitz, maybe let's say you use it for 1 year, and you would decide to sell that Vitz. You won't sell it at 90 kwacha because its value has gone down. As you are using it, it was having wear and tear. In short, the tires were becoming, not as the way they were when you just bought it, the engine, everything. So as you are using it, it's losing in value. That is depreciation. Okay, so the depreciation, that is, as you are using your equipment, they have lost value by this amount. So that's a loss. That's an expense, right? Then postage, the amount used to send emails, to send letters, etc. You write here. Electricity that you are using to make your dondos. By the way, dondo is English. Maybe you know the English way of saying it, which is dove on door. Okay, we call it in Zambia as dondo. So electricity that you used to make dondo, it's XX. So once you list all the expenses, you get the total expenses. So these total expenses must be subtracted from the total profit. Okay, so when you subtract the total expenses from the total profit, you get the net profit. It means the job is done. Let's take a look at this example. So in this example, we have the gross profit, 44,000, salaries at 5,000, rent 2,000, depreciation 1,000, electricity and all. Okay, so they want us to prepare the profit and loss account. So here is the profit and loss account. So I hope you can see this is how it will look. So to have the particulars and the amounts. So the gross profit is 44,000. So we record it here. The salaries is 5,000. So now, before we can even talk about these salaries, we first have to identify the incomes. So the incomes, salary, it's an expense. It's not an income. Your salary, it's an expense to the business. The business pays people salary. Rent, it's an expense. Depreciation is an expense. Electricity is an expense. Discount received, it's an income. Commission received, it's an income. Motor expenses is an expense. So these two are the ones we're going to pick. Okay, discount received at 700 and commission received at 800. We add them, we get 1,500. Now these total incomes, we add them to the gross profit, we get the total profit, which is 45,500. Okay, now we subtract the expenses, less expenses. So we list all these which are expenses from salaries, rent, depreciation, electricity, and motor expenses. So we list them. Then, of course, they have this values. Then we add them. Okay, 2,000 plus 1,000 plus 200 plus 500. It gives us 3,700. So this 3,700 we subtract from here. Then you're going to get the total here, which should be I forgot to do the subtraction, but you just have to subtract 45,500 minus 3,700. You're going to get your net profit. It means the job is done. So this marks the end of profit and loss account. See you in the next lesson.